Okay, here we go. Here's one thing no one is warning you about. You can get locked into a last minute escrow debacle, not because of your credit, but because your insurance. Let me show you what's going on in California right now. My name is 𝗬𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏𝗏 your local premier realtor here in the greater Sacramento area. And I have my friend here.
𝗦𝗶𝗶𝗹 the mortgage man. How are you?
Yes, thank you. I am doing fine, Mike. We have to get into this, and I know both of us are seeing this. The insurance here in California is up and down. I know, especially with some of the natural disasters, such as the fires that have been happening recently. But on the buyer side, they have to be very, very careful about they may fall in love with this property, and then all of a sudden they can't get insurance for it. Or even on if you're a homeowner and you're thinking about selling your home, you may think about, okay, I'm going to put my house up for sale, but how can I actually kind of fireproof my home or get it ready that I don't have any type of inspections that may need to happen, that an insurance company may say, hey, you can't sell your house because we can't insure it. What are you seeing on your side, Mike?
Well, you hit the nail on the head. Insurance is definitely and can be a debacle. And, for the probably the last year or so, since the last kind of big breakout of wildfires, and then there's floods in 2024, and all of a sudden insurance has gone through the roof. And not only has it gotten more expensive, but it's gotten more difficult to obtain. And so we're always suggesting upfront at pre-approval to go out and start looking for the insurance company that you want to work with and have a backup so that in the event that you find a property and you love it and you're making an offer and you find out that insurance might be tough, you're already sourcing where that insurance is going to come from and how much it's going to cost. And definitely figuring out if that area is in a flood zone or if it's in a high fire risk where it potentially is a situation where someone's going to need to get a regular insurance policy and a fire policy separate through the California state fair plan. So it can be really, really a difficult situation if somebody waits even a week after they get a contract accepted to start looking, because as you just mentioned, that insurance might come back not okay or needing to do something before they can actually insure the property.
That's perfect. Those are perfect scenarios. And I want to give some facts before I actually give a couple of examples. And that is really why you need to have a really experienced real estate agent and also lender, because on the agent side, for me, like I've been doing this for so long, when I see a property and I'm like, I see like maybe cracks in the driveway or in the sidewalk, or I see a tree kind of overhanging a house, when I'm dealing with my buyer, I'm like, oh, that can be like a red flag for an insurance company. So we need to really check this property out from an insurance standpoint right away. But a couple of different facts I want to share with everyone. California regulators recently approved a 17% hike in homeowner insurance premiums for state farm policies beginning June 1st. I know that happened a little bit ago,
Yeah.
but yeah, a lot of other insurance companies followed suit. Then also a deeper analysis shows that insurers pulled out in high fire risk areas, and there's other areas that, again, like you were saying, that now they require that fair plan. And they're coming back, but I don't know how long it's going to take for these insurance companies to come back to California. And then also in wildfire prone zones, carriers are demanding more mitigation proof or reusing policies or refusing policies entirely. So, this is really, I mean, it really causes a really hardship on some of the sellers that are trying to sell their home and trying to get out of there. And then even for a buyer that really loves an area and then they can't buy, even though they have the right credit, they have the monies to buy, but then now you have this insurance. Even if you can afford the insurance, you may not be able to even find an insurer that will insure the property.
Exactly. And there's always a way to find insurance, but what ends up happening is the cost can go up. And that can be not only cost prohibitive, where a buyer says, I don't want to be paying this much for insurance, but also from a debt to income ratio standpoint. And so I'll give you an example. We had somebody, it was early September, so about a month ago, and the standard insurance debt to income worked fine. But once they found out they needed that extra California Fair Plan requirement in order to have fire insurance, the debt to income went over 50. And we had to then have them bring in more money in order to close because they had to get to a lower loan amount to bring their debt to income down. And in fact, this client actually ended up paying off a few small credit cards in addition to bring the debt to income down. And so we'll always figure out a way and a solution to make it work. But it's something that we need to be on the forefront of, not the back end of, and be really doing all the due diligence up front and making sure that there's not going to be a hiccup during escrow. That's really what we want to avoid. And then the second part is I recently had a seller, a past client who's now going to sell and then go out and buy. And they contacted me also totally worried about the insurance on their home because they have the fair plan now and like what it's going to be like for a buyer. And I said, the best thing you can do is go ahead and work on that home inspection, a pre-inspection before you list, and figure out if there's anything in there that your insurance company today would say that's not going to work. And then you could fix those problems before you list your property. And then you're kind of giving, it's like a bill, it's like a clean bill of health. The doctor says like, you're clean. No, you don't have anything to worry about. You can present that listing with, my insurance has been confirmed here. This listing is clean. And so, even sellers can do some preemptive due diligence to make sure that they're presenting the property and marketing that fact, especially in an area where it's known to be high risk.
Yeah, you came up with a great point. And this is where the market is. That pre-list, that pre-inspection for sellers and getting those, those checklists completed is not just good for your insurance carrier, but it's also good for marketing. And that's something that I really do recommend a lot of homeowners do. If you're thinking about selling your home, pay the price and get that inspection done. And you're like, you may say, that's like the buyer's responsibility. But in today's market, you want to put the best product out there, because if you put the best product out there, you're going to get the best price and you're going to get more money in your pocket. And then you're not going to run into those roadblocks with the insurance company. One thing is the big takeaway for this one is that if you are a buyer, you need to make sure that if you see your home that you really love, start getting those insurance quotes. And if you have a good agent or a good lender, they should be able to have multiple insurance carriers or a broker, insurance broker that can get you multiple quotes so that you can, you have some choices to go with.
Yeah, absolutely. It's such great advice.
Okay, well, bye for now. Hopefully you had a good takeaway, some good information that was shared. If you have any more questions about this topic or others, put it in the comments and me and Mike will make sure that we address those.
Thank you.
Bye.
Bye for now.